Thank you, C. Welcome to the sulfuric acid section of the webinar. My name is Lily Minton. We're going to start with the global drivers for 2025 and what is happening and what will the implications be going forwards this year. Starting in Asia, South Korea, Japan output has been lowered from the fourth quarter of 24 and into the first quarter of 25, impacted by heavy maintenance and mandatory outages in Korea. Meanwhile, in Japan, we have planned maintenance that limited output in the first quarter, and some intermittent output issues have continued in Japan, also limiting spot availability. Looking at China, and this is where most of the smelting capacity that has come online this year we've seen into the market. It is the key factor to watch going forwards, but the issue that is constraining that expansion in availability or the full operation of smelters is the concentrate availability, which has led to negative and record low TCs, RCs in the spot market, impacting the smelters. Smelters have as a result, they've had to lower operating rates, which has led to also prices to be largely range bound as availability is impacted by that. So that's something that we're keeping a close eye on China and the domestic market dynamics as well, because if the domestic market is paying more than the offshore market, then there is more incentives to leave to keep the tons of sulfuric acid tons in the domestic market rather than exporting. So we have domestic and international dynamics as well. On top of that, the concentrate availability. Now looking at demand side, Indonesia has become the largest outlet for sulfuric acid so far this year. We have more specifically for Asia Pacific, Chile is the world's largest importer, but in Asia, Indonesia is a key outlet for the region due to the increase in its HPAL capacity. We've had also delays in capacity leading to high import levels so far. The Freeport Minor Smelter, more specifically, which was due to start end of last year, has saw a delay of about 6 months. The smelter now started in May, with June, July expect to see the first acid cargoes. Now we also have burning capacity additions, which will provide sulfuric acid for captive use, which will add to the balance. We have sulfur capacity additions plus the supply from the Freeport Minor Smelters that will change trade flows to this region. But in the meantime, while those become fully operational, we expect to see demand and imported cargoes into Indonesia. India demand remains strong as the fertilizer producers seek to rebuild stocks of DAP for the Kharif season. But the most important factor here and the key driver globally is Morocco. OCP will remain in the market, and while it is said they will import less than it was imported last year, which was about over just 2 million tons, Argus estimates that OCP will import around 1.5 million tons for 2025. Again, they're importing not just from Europe, but also from China, tapping into Asia, and also providing support to the global market because China is where most of the spot availability is. Finishing quickly with Europe, concentrate issues as well, ore quality limiting output from the smelters in Northwest Europe. On top of that, we have a strong domestic market due to the tightness in the liquid sulfur, which is impacting sulfur burners in Europe. And in Chile, to finish, the market was imbalanced in the first quarter and into early second quarter. Chile will become and will remain the largest importer globally with about 3.5 million tons per year. And this year, 2025, saw more end users leaving volumes to the spot market. So we expect them to come June, July to seek cargoes arriving for the second half of the year. So now moving on to, we have the supply changes. Specifically, we have China smelter capacity additions continues, but tight concentrates are a risk. China, the sulfuric acid capacity estimated to grow by 4% in 2025, but this is at a risk due to the tight availability of metal concentrates, posing a delay in commissioning of the smelter projects, and also reassessing the feasibility of current metallurgical capacity. This is something that's been done by the major miners such as Glencore, BHP, and Nyrstar, that have had to resort to some sort of arrangement to deal with this record low TC/RCs. That's a result of Philippines, the Glencore Pasar smelter put into care and maintenance a couple of months ago, and also we have that situation that will continue for the foreseeable future. Looking at India, we had the Adani smelter that started up earlier this quarter, and that's we don't know exactly the operating rate, but the concentrate availability issue will remain for Adani, and we're just monitoring what's happening there. And the PPL sulfur burner has seen a delay. Some say it will be August, whilst other participants in the industry expect a delay much farther into later this year and into next year. So we had some changes here that will continue to see trade flows in Asia. More specifically, China will remain the focus, global focus, in my opinion, due to the changes that are happening with the smelter expansion capacity. So just to summarize now, the hot trends in supply, we have Indonesia key, because it's going to cause a structural shift in supply as the country moves towards self-sufficiency. We have capacities such as Freeport Manyar smelter, but we also have sulfur burner capacity that will all lead to the country to become self-sufficient, and trade flows will change in the medium to long term as that capacity becomes fully operational. We also have copper concentrate availability and record low TC/RCs impacting smelter operations across all regions. And as mentioned before, some metallurgical assets are under review, and there is the potential for the smelters to reduce operations due to economical conditions. Looking at demand, what's to watch this year, mainly OCP, which is the key factor that can tilt the market into imbalanced. We have 2 new sulfur burners operating that came in 2024, which will lead to less sulfuric acid imported, but we've seen a short-term pickup in demand as these burners come online and fully ramp up, but also as we've seen OCP constantly trying to buy and secure about 250,000 to 300,000 tons of sulfuric acid per quarter. So considerable amount that is in the spot market. We also have Chinese demand remains strong, but it is easing. It is easing, at least the fertilizer season is now off. And also there is some easing in demand from the industrial sector, more specifically the titanium dioxide sector. So also another factor to keep a close eye on, because once domestic market in China starts to weaken, we could expect to see more acid sent to the spot export market. And India, another factor, because there is strong demand for DAP, fertilizer products, which is supporting demand for feedstocks from the fertilizer plants. And finally, with Indonesia, we have demand from nickel HPAL plants supporting sulfur buying now when they become fully operational. So thank you so much. Any questions, please let us know.
Thanks to our presenters for this intriguing series of videos. As mentioned at the start, the content presented today incorporates data and analysis from our sulfur and sulfuric acid price reporting services, while we also support the industry with outlook and analytics services. And here's a quick reminder of the price reporting, outlook, analytics, and consulting support that we offer. We also have a highly respected and well-attended series of fertilizer conferences. These events are the perfect platform to network with industry peers and hear unique insights from knowledgeable speakers around the globe. If you have any questions on any of our sulfur and sulfuric acid services or our coverage of these markets, please email us at fertilizer-m@argusmedia.com or visit argusmedia.com/fertilizer. Thanks again for watching the videos. We look forward to speaking to you soon.